welcome to FX Bootcamp. Today is Tuesday, December 19th, 2006. This is your daily video technical briefing. You're looking at the Euro USD 15-minute chart right before the opening of the New York session at 8 a.m. Eastern Time. And first of all, let me wish you happy holidays. Second of all, let me remind you that because of these holidays, we have a thin market. And thirdly, because we have a thin market, we should keep our technical analysis simple. Let's refine our analysis right down to the core of what it means. Taking a look at yesterday's range, you can see that, we already have a higher high than yesterday's high. So that's an uptrend. Second thing is you can see that price is above the M4 pivot point. That means as price comes back to retest that pivot point, you have to assume it's going to hold and price will continue up. Plus this is an uptrend, so let's start pointing up. If you do a study using Fibonacci, you go from the swing high to the swing low, you will see that our first fib extension is at 131.94. You overlap that with pivots. You see that the R3, which is reversal 3 pivot point, is at 131.94. 131.94 is right before the psychological level of 132.00. So that makes a whole lot of sense to me. So we're targeting 131.94 as a target. So now we have to look for entry possibility. Anything around, let's say, the 50% retracement level, which is, let's see, let me zoom in a little bit. What is that, 28? And you look at the pivots again. R1 is 131.28, and that's also overlapping a 50% retracement level. And it's also a 55 EMA, so that looks good. Let's see what happens. Bollinger Bands are narrowing. It's going to break. Broke down to the downside. It just touched the R1, and this happened with news, so we got to pay attention what happens after this. But it came down, touched the R1, which means it's challenged the M4. It's touched the 55 EMA in an uptrend, and we're pointing up. So this could be an entry point, but you'd have to be very aggressive. Oh, now price held here, and it held above the M4. So the M4 is held. What I said is if the M4 holds, you have to assume it's going to hold, and that would point to the upside. Now we have a reversal pattern. Oh, there we go, a new higher high. You can see that we broke out of this area. Now we're at 74. Coming back down. But that's a bullish engulfing candle. That is only confirming our direction. Now watching the clock, it's getting late in the day, so as we hit 5 p.m. London time, we should get an increase in volatility as the London boys start cashing out of their previous trades. You can see that it's still looking bullish. Let me remove the fib. Remember, we're going for 94 because it's a 121.4 extension. But you can also start giving yourself a little channel here. So now we have support down here, and there's the resistance. Let's see where we can go from here. Price moving up. We're riding the 21, and there's our target. We hit our target 4 times, now 5 times. We're still at 131.94 an hour after we achieved our target. So again, in this thin market, I suggest that you keep things simple, you don't overanalyze. Take a look at trend and direction, the high and low of each particular day. Pay attention to your fibs, pay attention to your pivots, look for where they overlap, and keep it very, very, very simple. And I think you'll do just fine during these holidays. Today is Tuesday, December 19th, 2006. This has been your daily video technical briefing by FX Bootcamp.